And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trading routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning. Welcome to the market forecast. Today is Monday, January the 24th. I'm John Hoagland. Thanks for trusting me with your time. Dan, thanks for covering for me on Friday. I know you were all in great hands. Hopefully you had a good day on Friday and a good weekend. Lots going on in the markets and in the world today. Lots to keep an eye on. Just a kind of a warning, there's going to be a lot of potential headline risks in the markets today. We got to make sure and keep our eyes on the news. As we all know, there's a lot going on overseas, and the uncertainties continue to kind of pile in here. I got Lacey here saying good morning. As always, we're going to attempt to find accurate context, good risk management, and exhibit patience in the markets this morning. 8:45, the PMI composite preliminary due out, not expected to be all that impactful. However, we do have an important week of information coming out. Tomorrow, the FOMC meeting does begin. Case-Shiller Home Price Index, some housing pricing indexes, consumer confidence tomorrow at 9 a.m. Then, of course, on Wednesday, we have international trade in goods at 7:30. We also have wholesale inventories at 7:30, 9 o'clock, new home sales, lots of home sale information this week. Petroleum status report, of course, also on Wednesday. And then the FOMC announcement, 1 p.m. Central. Maybe some changes to what they're thinking about as far as policy is concerned. With the uncertainties overseas, we're going to have to wait and find out about that. Thursday, big day, durable goods, GDP and jobless claims all out at 7:30. EIA, natural gas report, obviously, is going to be, as always, at 9:30 Central Time. And then Friday, personal income and outlays, and Michigan consumer sentiment. So all of that due out this week. Not a whole lot coming out today, but it seems as though there's enough information for us to deal with as far as what's going on in the world. Again, the markets on edge. Of course, we're in a kind of a risk-off situation here. Everything on a hair trigger. Keep your ears and eyes on the news. Bitcoin is off more than 50% of its all-time high. Continues to get smashed. U.S. stocks are set to open lower yet again. The S&P is testing 10% correction. The Nasdaq at 15% correction as global tensions and uncertainties increase. We've got the Russian-Ukraine situation. The U.S. and the U.K. have told diplomats to leave the country. The U.S. is considering adding forces to the NATO troops that are heading over there. The brinksmanship continues. There's still room for discussion, but it doesn't seem like either side is willing to make any changes. We do have earnings this week. It's a slow start, not a lot of earnings this morning. We do have IBM due out this afternoon. Crude prices have stabilized as Iran says they're closer to an agreement, perhaps relieving some of the U.S. sanctions. And the United Arab Emirates has fended off a few more missiles from Iranian-backed rebels in Yemen. Apparently, the crude oil still flowing from there. So there's a lot of, again, headline risks coming out of everywhere in everything. It seems as though our world just keeps getting more and more complicated. And I'm just going to continue to pray for peace and for health for all of us. The VIX this morning up 10%, 31.81. Obviously, with the markets heading lower, volatility increasing. Dollar index higher, back up around 95, 97, back up around that 96 level. And the yield on the 10-year continues to kind of crumble a little bit here, 1.72% this morning. As always, make sure you hit that lucky like button. Share, question, comment, feedback, and heckling are always welcome. Make sure you subscribe to our YouTube channel so you can know when we do go live. Good morning, Chris. Zerain, Chris, first in the room. You win the prize. Zerain, Alessandro. Charles Shaw, good morning. Theo. Brian, Terry, Equanimous, Andre. George, Robert, my brother Rick, love you, buddy. Vince, good morning. Alfredo, Laura, Juan, Cristo, good morning. Kevin, Daryl, Dr. VJ, Expediter, Johnny, good morning. Alan, thank you. Nice beard, huh? Yeah, it's a little grayer than last time I did this, but that kind of goes with time, I guess. Good morning, Drew. Good morning, Mr. from Russia, it looks like. Three Lions, good morning. Simon, good morning. Trading Research. Your dog nearly made me jump out of my ass. She's watching for the dogs, walking in front of the house as people walk their kids to school. She's got one hell of a wolf. Yeah, and that's a she. She's an 85-pound, we believe, a Belgian Malinois. She was actually a rescue, and she's always looking out for us, that's for sure. Good morning, Frederico, Jim, Sarah, Albert, Jay Trader, Columbus, Danielle, Jay, and Roy B. Good morning, everybody. I see a few names there. Might be new folks watching, and I appreciate you being here. Hopefully we're going to get some help and some good information for everybody. Speaking of help and good information, we do have the Top Step Trading Foundation today. Today we're going to be talking about the auction process. I'm going to put a link in, so if you are not there, there's the link to get in for Trading Foundations, and then there's group coaching today. Again, because of foundations, it's been a little bit late. I'm going to try and make sure and be in group coaching at 1:30 today versus the usual time at 1 o'clock because of foundations. But some good opportunities for us to spend some time together and see what we can do as far as improving our trading. Sarah, thank you for your prayers for the world. I believe it's so helpful for all of us to imagine a peaceful world. It's totally possible, and it is totally possible, and we can't give up on that. Just keep praying, Sarah. Wonderful, wonderful sentiments this morning for everybody. All right, so we've got a lot going on. The markets are likely to change again with a hair trigger. We're going to check the S&Ps here first. We'll see what's going on in crude oil on the opening, and then, of course, on to the Nasdaq, gold, euro, 10-year, and the natural gas. Let's go ahead and jump in here. Let me get all set up, and we are good to go for S&Ps. All right, so the S&Ps. I'm not going to go all the way into all of the charts here, but looking at the monthly chart, there's a bearish engulfing pattern. That's a reversal pattern on the monthly chart that is, telling us that the upside is over for the time being. Obviously, we've got weekly one time framing lower since we put in all-time highs up here. So the monthly, we see some reversal pattern. We see one time framing off the all-time high. Daily, we've been one time framing lower all of last week. Volume has been increasing on the way down here. That's something that we think about when we talk about the auction process, is how good of a job is it doing? It's increasing volume. It's doing a pretty good job. We increased another 26,000 in open interest on Friday. That's another healthy signal for a downside auction to continue. As we know, if something changes, these markets are very resilient and they can change course very, very quickly. Sometimes, sometimes it takes a while. It's like trying to turn a battleship around in harbor. But the 10% correction we are at here, this is the continuation chart. If you want a continuation chart on TS Trader, it's the and sign, and then the ticker symbol, in this case ES, that gives you the daily continuation chart. You'll get a lot more data on that. So we're testing down to that 10% level, 43.27. We've got our weekly kickoff level, 43.30. We're pretty close to that. We're looking at that as a level that a lot of traders are going to be looking at when we start to see these markets head to the downside. I usually will end up putting up my percentages just like I have here on my continuation chart, because I know a lot of traders are going to look at those. And that kind of gives us some opportunity, if we have all of our shorter time frame traders focused on that gives us a level for an exit or a potential entry. Here's the 30-minute chart. Okay, we had a late spike. We opened in it. We finished the day lower. We had a late spike on Thursday. We opened below it, tested into it, and continued the move to the downside. Is this technically a late spike? It's a one-time framing activity that didn't necessarily have time to find the opportunity to accept that lower pricing. We're going to be opening below that today. We're going to be opening with a gap. We've got overnight inventory to the short side. The first thing we're going to be looking at is if we can't close this gap, we're going to be looking for continuation to the downside. We're going to be looking for this market to, where's my levels here? We're going to be looking for this market to continue its push to the downside. For some reason, it did not change my levels here. So I'm going to go ahead. I'm going to go put this down here. Weekly kickoff low, 43.30. Really pretty close test to it so far here in the opening. 43.30 right here. So getting relatively close to it. We've got last week's low, as we can see right here. So the market continues to look to find more and more sellers to the downside. If the volume continues, if open interest continues to pile in, then there's more downside to it. As we said, the Nasdaq has been presenting weaker since it was at its all-time high. It started putting in lower highs and lower lows on the daily chart prior to anything that the S&Ps have done, and we're gonna check and see the chart there here very shortly. We're coming into crude rollover, and we like to kind of watch that first minute. Is there a good opportunity in this first minute? Well, open interest is lower in balance. Okay, we lost 2,500 in open interest on Friday, but volume is rising largely because of rollover, right? Friday we had expiration of the February contract. We're in March contract. No worry about rollover now. The market is free to have all of the participants focusing on directional activity, should that be the case. These pink lines here represent last week's high and low, a very narrow week. Are we putting in a bull flag here? It's a very good question. We're going to have to find acceptance above this trend line along the top here for that to become true. The market seems to be awaiting new data. There's plenty of data out there to argue for both directions, really, in the crude oil market here this morning. And we've got, potential more coming from Iran. We've got UAE protecting their port. So we're really kind of, I think, here for the last week looking for information as well as finishing up rollover. There are considerable headline risks, ladies and gentlemen. Please remember there is a lot of headline risk. Hey, my son Luke is watching. Hey, Luke, good to see you. Yes, the topic for Foundations today is the auction process. And what these markets are never-ending two-sided auctions that occur in multiple time frames. So here's last week in the 30-minute chart in crude oil. This morning, sitting down, there was very little overnight inventory. It seems as though we've accumulated some new shorts here, perhaps some shorter time frame, perhaps some longer time frame. We've seen volume come up a little bit here before the open. We are opening, looks like we're opening right now with a gap. If we don't close that gap, we know what we're going to be doing. We're going to be looking for opportunities to the short side. We've got last week's low. We've got an unchecked naked point of control just below. That would be a very easy check for us at this point. The way this market is inside last week's range, just about any short time frame level may or may not help, may or may not work. I'm going to be focusing more on the extremes of last week's range before I really start to get involved in anything substantial. Smaller trades, some shorter, some faster trades might be helpful for us in crude oil today. But again, we've got the market opening with a gap. It looks like we've just closed the gap. What's the 1 minute chart look like? Say the 1 minute, we are still inside. It's a 20 tick opening range. You see the market has been coming off. If we take out the high of the opening range, there's a chance that we could come back and close the gap, or even unravel some of this overnight inventory that's accumulated here in the last hour. We continue and we break out below the opening range. That may indicate sellers are still in control, and we may see the market continue in that direction. Market is really just kind of hanging around here in the opening range. And there was a question last week about, what do we do? Well, there's the idea of confidence. What do we do if the market stays in the opening range for several minutes? If that's the case, it indicates a lack of confidence from either buyers or sellers. So it just means we're going to try and stay a little bit more patient if that is the case. If that is the case where we have the opening range and we don't leave it for several minutes, that's telling us, hey, there's no big deal here. Let's be patient, look for better opportunities. So back to the 30-minute chart here. We've closed the gap, no more gap. The gap close can be resistance. If we find acceptance back inside range from Friday, then we may see this market come back into value, back to point of control, back to settlement price here, which is 85.14. So we got to see if we find acceptance inside of range from Friday. Inside of value from Friday would be a good one, but it's not that great an opportunity because value is so small from Friday. So watch and see what happens. The opportunity does give us the chance here to limit our risk. And that's really the most important thing. I can take trades all day long as I can limit the risk, as long as there's legitimate opportunity and reason to take the trade, and I can limit the risk. The low from yesterday's range offers us that opportunity in either direction. Let's take a look at the Nasdaq now. Right, so here's the Nasdaq. Here's the daily chart. Here's what we were talking about on the open here was, we started putting in lower highs and we started putting in lower lows. The Nasdaq really kind of told us earlier that the equities market may be in a little bit of trouble, and it certainly looks like that now. Now we have new information, new news that is exacerbating that situation, especially for the Nasdaq. Again, on the monthly, weekly, and daily charts. It's very similar to the S&Ps, however, presenting a lot weaker. Here's the 15% correction off the high. We're at the 10% in the S&Ps. Volume maintains, if not increases, as open interest increases. We added 12,000 new contracts to the downside on Friday. So as price continues to push lower, if volume maintains or increases and open interest increases, we're talking about the auction process today. The auction is presenting itself as doing a good job. It's increasing volume, increasing interest in that direction. When we're thinking about what the market is attempting to do, it's attempting to go lower, obviously. How good of a job is it doing? It's bringing in new participants as the auction continues. It's more likely to continue in that direction. Of course, anything news-wise that could, let's say all of a sudden, this Russia Ukraine thing gets resolved. Let's say they say, you know what, forget it. Let's just be friendly neighbors. That's going to change the face of geopolitical around the world, not to mention what's going to happen to our markets. And we can hope and pray that that's going to happen, but we don't know what is going to happen. So we are trading for the potential as to what might happen. Let's take a look at the 30-minute chart here. Let's see what Rick says here. The double top. Bang, bang. And, we did something similar in the S&Ps, except we put in a higher high. This is a lower high. Continuation to the downside. All right, here's the 30-minute chart. We have late spike. We opened above the late spike, but we really found sellers. Another late spike. We opened below the late spike. We continue lower. Do we have another late spike today? It's technically, I wouldn't say necessarily a late spike. However, the market did one time frame lower and close on its low. The pink line represents last week's low. We're still wrestling with that in the S&Ps. We have yet to test weekly kickoff low in the S&Ps. This is weekly kickoff low in the Nasdaq. Remember what these weekly kickoff levels are about. They are levels where we believe that longer, stronger traders will be forced to or want to adjust inventory. And when our bigger, stronger traders adjust inventory, they can move a lot of product and move price considerably. We're going to be opening with a gap with relative confidence here. Gap rules, spike rules. We're looking, as long as we can't close that gap, for opportunities to sell, strengthen this market. Where does that break? If we can get back above weekly kickoff high and reaccept in Friday's range, that may be an indication that we've come a little too far too fast and that we need an inventory and adjustment and a possible pullback. Not saying that we're going to turn around and head higher, but a pullback, could be in the cards here if we can't hold below weekly kickoff low and that 15% correction level. Don't forget headline risks. Headline risks. Juan, I'm glad that that's working for you. Good morning, Rational Investor. Good morning, Level 2. I haven't seen you for a while. It's good to see you. All right, let's take a look at gold now. We got our gold market holding better than silver, we'd have to say. Gold is a store of value. If we are in a flight to value type of situation, this is historically the best store of value. We've got our cryptocurrencies that were, unseating the previous stores of value at 50% of value that they had not that long ago. So the cryptos are really getting hit too. Do we have another bull flag forming here? It's entirely possible. We had a bull flag here last week. We broke out. We just another stair step higher. If we can take out the high of this bull flag, we may see this market continue higher. It's entirely possible. We've got a risk-off situation, and historically, gold has been the best store of value. We've got silver here, or kind of off its recent highs considerably. not holding that value as well as gold, unfortunately. Take a look at the 30-minute chart here. So here's that next bull flag. Are we breaking out of it? Does this mean that we bring this up here? Well, nobody really knows. I'm going to be looking for acceptance above or acceptance below this level right here, pretty much where we are right now. We've got some overnight longs here. Have they been able to reconcile themselves? Here's all of our overnight longs. Here's settlement 1831.80. Pretty close to our session, our extended trading hour session low. We got some buyers here. They've come off a little bit. We found some buyers. We're still in value. We're still in an area of potential repair. When we talk about repair, remember we did that last week in the euro. Here we've got a high volume node, which is point of control. We've got a low volume node down here just below the low of value. And we've opened and we've been basically kind of rotating back and forth inside this low volume area here. The market may be basically taking care of some repair before it can continue its move in either direction. Stay patient. We're in range. We're in value. Let's take a look at the euro now. Speaking of, right. So we had a breakout a couple of weeks ago that really just kind of ran out of gas. We had all this space up here, and as the dollar started to kind of gain favor again, the markets really returned back to range, back into value. We've got last week's low that's currently in play. We lost 3,000 in open interest on Friday. As we've come back into balance, it just makes sense that we're going to be kind of sitting some more money on the sidelines waiting for the next opportunity. I'm going to be focusing on the extremes. Last week's low, weekly kickoff low is one of those extremes. So I think we're getting into an area where we may find some opportunity. If we're looking for the extremes on the other side, we got some space up here. We got last week's high all the way up here, and then a weekly kickoff high up above. We do break out of this short time frame area to the upside. I believe there's enough space for us to get back up to that level for where we may see longer, stronger money. Lacey says, short the euro. Yeah. She's watching all the folks trudging through the snow, getting their kids to school. Here's the 30-minute chart. We got some considerable shorts here. Settlement is 128. 113.53. Almost all of our overnight inventories to the short side. We've got a big gap to the downside. We're wrestling with last week's low. This is a pretty interesting area here. I'd say if I was going to be looking for some fish, this might be one of those areas somewhere between last week's low and weekly kickoff low. Considerable gap. Odds are less likely we're going to close that gap, but I got to be careful looking for the overnight inventory adjustment, which could bring price back towards a gap close. If we don't, then we may see continuation of sellers to a true test of weekly kickoff low. Here's the 10-year. Hey, what is that? All right. Rates are off the recent highs. Obviously, that's going to bring prices higher as rates go lower. The geopolitical situation has changed. My question is, with lower rates being priced in here, is there speculation with the geopolitical situation that may change the course of the Fed? If they start seeing the market struggling a little bit, you're going to see a course adjustment from the Fed. It's just something that kind of popped into my head this morning, and I think it's going to be very interesting to see what they have to say about all of this on Wednesday. I'm glad that we have FOMC this week because we won't have to wait that long to find out relatively quickly what they're thinking about this current situation. But anyways, we got a V-shaped bottom here. We're one time framing off the low. You have to look at this and say, it looks like our opportunity to sell strength is now turned into an opportunity to buy weakness. Where do we go from here? We're in range, we're in value, no overnight inventory, no gaps, no runs, no hits, no errors. And we've put in a low. I'm going to be looking for this market to be kind of adhering to some shorter time frame levels. We've got a previous settlement up here with a naked point of control that would kind of lead to a breakout of Friday's high. We've got plenty of room and repair available to. Oh, this is not the right chart. Why do I keep doing that? So here's the 30-minute chart for the 10-year. I knew something was wrong. We got last week's high in play here. Got a gap here. We're unable to close the gap. We're coming off the low. We got open interest. We lost 51,000 in open interest on Friday. So are we building volume? To some degree, we did on Friday, but mostly last week it kind of fell off on those lows. Coming off those lows, we increased 10-year. So I think there's opportunity here. The fact that it's last week's high, I find interesting. Anything great? Overnight longs, gap closed. Be patient. Oops. We got nat gas left here, which I obviously went to the wrong chart. All right, here's the March nat gas. It's in rollover. We're switching to March today. Volume is a little bit higher in March, so we've changed our charts. If you are trading nat gas and you're still trading February, it's okay. Make sure you switch to March as soon as you can. If not, at the latest by tomorrow. We're back in balance. We had this 2 or 3 week, maybe a month-long area of balance. We broke out to the upside. There was still plenty of potential for a continuation move to the upside. Things changed. Bearish piercing pattern, bringing us back into value, back into range. We see that obviously the volume is increasing in the March contract as the volume in the Feb contract is decreasing. We lost 2,300 in open interest overall. Again, that could be a function of rollover. We got to remember when we are in rollover that volume and open interest becomes a little bit blurry. Me too, Michael. I'd rather look at the nat gas. All right, so the rollover range bound, nat gas, again, range bound, no real overnight inventory, nothing to use for short time, faster trades. I'm going to suggest trying to stay patient today because we are in range, we are in value. The rejection of range from Friday could bring us an opportunity. The rejection away from Friday's area of value and range could also bring an opportunity. It's going to be one of those days where we are really going to have to try and stay patient. We'll keep our eyes on the news, keep your eyes on the headlines, and be patient. Again, it's waiting for the opportunity to present itself versus going looking for it. All right, so we've got about 10 minutes here before the open. Again, thanks to Dan for covering for us on Friday. I know you guys were in the best of hands. Looking forward to challenging and hopefully profitable trading day for all of us. And again, the uncertainties in the world, the inequities, the hostilities. Say a prayer for all of us, of course. Get out there and profit today. Have a good trading day. We'll see you for Trading Foundations and or group coaching today. I always look forward to doing that. And let's take our deep breath. Yes. Yes, the weekly kickoff high for crude is $95. It was the next visual level that stuck itself out to me when I calculated that. It's a long ways away, but the market certainly has it in it. Yep. All right. So back to our deep breath. Really hope you guys do that. Always makes me feel better. Stay humble, grateful, and creative in your trading today. Looking forward to seeing everybody this afternoon. You'll see Dan for the market recap today at 3 o'clock, and I'll be back tomorrow for the forecast. Get out there, profit. I'm going to run down to the proverbial trading pit. I'll see you there in a few minutes. Let's get them today. Again, there's nothing that says you have to trade if you're not seeing it. One of the things that we always have to try and remember is if we're confused, if we don't see anything, we're better off not doing anything. So have a great trading day. We'll see you later.